We're in a very interesting environment, and it's caused by monetary instability around the world. We see what happened because of COVID. We have to get this thing under control. And if by the end of the year we stabilize around 0% year over year growth, this line will drop toward 2 to 3%, which, as you can see, we've only seen once. It was in the 90s. And, after that, all hell broke loose around the world.
In an unbelievable turn of events for Bitcoin, Bitcoin's biggest seller just flipped to a buyer. Grayscale's Bitcoin ETF GBTC sees positive inflows for the first time in like 80-ish days. See for yourself. Look at this. This is when the ETFs launched. This is almost 80 days later, flipping bullish.
We're in a very interesting environment, and it's caused by monetary instability around the world. Of course, in emerging markets, anyone with a connection to the internet now pretty much can establish or buy an insurance policy in the form of Bitcoin.
So understand that Bitcoin almost doubled in one quarter, going from about $40,000 to just over $70,000 because of the ETF buy pressure we saw happen. Net Bitcoin ETF flows have been largely positive. We know that Grayscale, the one in blue here, has only been selling. Bitcoin rallied from $40,000 to $70,000 despite the immense selling we saw from Grayscale. Every other ETF has seen net inflows. Grayscale has just been seeing outflows. That is until today. After a prolonged period of continuous outflows, Grayscale's Bitcoin Trust Exchange Traded Fund ETF recorded its first day of net positive inflows. According to preliminary data from Farside on May 3rd, Grayscale's Bitcoin Trust GBTC witnessed 63 million in net inflows. This positive momentum comes after an approximately 17.5 billion in outflows since the launch of the 11 spot Bitcoin ETFs on January 11th. So Bitcoin went from under $40,000 to over $70,000 because of net positive inflows. This is the data, in spite of Grayscale selling billions and billions of Bitcoin until today. So what happens when we see every ETF start to increase its Bitcoin holdings? I'll tell you, we're going to see net inflows rapidly increasing a lot harder than this. Bitcoin's biggest seller just turned into a buyer. So while it is definitely still possible, Bitcoin falls to a lower low sometime in the next month, Bitcoin could hit 52,000, 53,000, 54,000, somewhere in this range. That is definitely still possible. The more time that passes, the more likely Bitcoin eventually breaks up. I think once Bitcoin clears $70,000, once it's clear that Bitcoin is above $70,000 and pushing up against all-time highs, maybe even a little bit above all-time highs, we're going to see a renewed interest in Bitcoin ETF inflows. We're going to see the total number of Bitcoin that these ETFs hold really start to increase. And then probably again, once Bitcoin breaks $100,000, once that happens, all bets are off. All hell is going to break loose, particularly because Bitcoin and crypto, it's not just confined to America. These are global assets. There's kids in Bangladesh buying coins, and of ETFs specifically, I mean, they're launching Bitcoin and Ethereum spot Bitcoin ETFs all over the world. Hong Kong most recently, but plenty of others. And while their markets are not as large as America, 1 billion here, another billion there, another couple billion here and there, this is significant for price. But like I said, guys, we could see Bitcoin fall to 55K, 54K, 52K. But given enough time, I think it breaks up in a big way. Guys, don't be like Greg. Volatility equals opportunity. Look at this tweet. Look at when it was written. I wish I kept my 1,700 Bitcoin. I bought at 6 cents instead of selling them at 30 cents now that they're $8. And obviously, that was only the beginning. Cathie Wood is predicting Bitcoin hits $1 million over the next 5 years. Now that we are post-Bitcoin halving, Cathie and ARK Invest give their updated Bitcoin investment thesis. This is the most updated Bitcoin investment thesis out there right now. It is incredibly beneficial to you as a Bitcoin holder that you watch this, that you listen to her thesis. Smash the like button, subscribe to Altcoin Daily for daily crypto updates. Bitcoin gets to 1 million because of this. Listen to Cathie Wood and ARK Invest. This is their updated Bitcoin thesis.
From a price action standpoint, the Bitcoin halving tends to coincide with bull markets. So Bitcoin's now trading at roughly $60,000, and it's gone through a pretty nice reset after making all-time highs in March. And so we like to look at just healthy resets, healthy liquidations on the longs, especially during a bull market. And we've seen a 22% drawdown from the all-time highs, which tends to coincide with what we've seen in previous bull markets as kind of local corrections. Regarding Bitcoin's predictable monetary policy, it really is one of the primary reasons why we have such high conviction in Bitcoin and why we have had it over the years. And we've really taken a monetary lens on assessing the potential for Bitcoin versus that software technological lens. And that really comes down to Bitcoin's monetary policy. So Cathie, I've learned a lot from you just on monetary history, monetary economics. Maybe you can sort of put that monetary hat on and really highlight the sharp contrast with Bitcoin's policy versus, central bank policymakers that, can adjust the supply growth idiosyncratically at will.
Absolutely. This halving chart is, you can see the discipline here. It's been mathematically metered, and actually we did a Bitcoin brainstorm with miners. This monetary policy basically was written in 5 lines of code. I did not know that until we did that Bitcoin brainstorm. It is so elegant, so simple, so straightforward. In contrast, take a look at this. This is M2 growth, and it's a 4-year annualized percent change. So from this past March to March 4 years ago, what is the monetary growth rate at an annual rate? That would be the last data point here, which is black dashed line. So that rate is about 8%. And actually, probably it's closer to 6%. There's a lot of data on this chart. But take a look at the 4-year growth rate of M2, and you can see it's all over the place. You can see in the 60s and 70s, it moved toward double digits, and we ended up with double-digit inflation in the late 70s, early 80s. It took a while to get there, and it seemed to be very sticky. And then after Chairman Volcker came onto the scene, I think that was 1979, he said, we have to get this thing under control. And he started choking money supply. And that momentum actually continued into the mid-90s. And then in the mid-90s, it was very interesting because it's somewhat similar to today. In the mid-90s, there was a domino effect of currency devaluations around the world. Our monetary policy was propagating throughout the world because it is the world's reserve asset. And the first devaluation actually was Mexico. And it was a big one. I remember it very clearly because we were involved with Mexican stocks. And then a few years later, we had the Asian domino effect. I think the Thai baht devalued in 1997. And then the rest of Asia's currencies devalued. We had the Russian default in 1998, and then we had long-term capital falling apart. Monetary policy propagates through the system, and when it's so unpredictable, it leads to all kinds of excesses. And so what do we have now, where we see what happened because of COVID? That drove the 4-year annualized growth in M2 up to 12%. And then now we've had a very sharp deceleration, unlike the 70s, 60s and 70s, where there was sort of an acceleration at least in the sense of a trend and a stabilization near double digits. Here we had money thrown at the system to prevent an outright depression. And if by the end of the year we stabilize around 0% year over year growth, that's year over year, this line will drop toward 2 to 3%, which, as you can see, we've only seen once. It was in the 90s. And, after that, all hell broke loose around the world. It is interesting to note that the devaluations, there are many devaluations taking place in the rest of the world today. I've mentioned in the past Egypt devalued by 40% in February or March. The Nigerian naira is down 50 to 60% in the last 9 months. We're seeing the Indonesian rupiah devaluing at an accelerated rate. And in Latin America, of course, Argentina basically recognized that the black market had it right, that its currency, at least publicly stated, was about 50% of that rate in the black market, and that was correct. So we're in a very interesting environment, and it's caused by monetary instability around the world. Of course, in emerging markets, anyone with a connection to the internet now pretty much can establish or buy an insurance policy in the form of Bitcoin, which, just flipping back to the halving in this purple line, doesn't look anything like the volatility you see in monetary policy here in the United States and around the world. And of course, it's controlled by human beings. When we went off the gold exchange standard and closed the gold window in the United States in 1971, monetary policy just became unhinged. And it has been unhinged ever since, although human beings have tried to contain the inflationary ramifications, and they take it too far both ways. And right now, we think they're taking it too far on the downside.